NVIDIA, Amazon, and Apple over the course of 5 days. As an investor in those names and that sector, what's been the net result for you of everything that's happened this week?
Well, the big technology companies have had a very difficult quarter with the Chinese AI competition coming up and the trade tensions and the deals, the Middle East visit, and these deals are coming right at the best imaginable time so far this year. First of all, we have been seeing companies delaying their AI investment plans due to tariff uncertainties, and there are a lot of questioning regarding how much of these investments could still materialize given the gloomy economic outlook. And the deals just come at the very best time and from the richest countries in the world. So there is a reason NVIDIA jumped 15% since Donald Trump's Middle East visit. We think that the NVIDIA deals with the Saudi and Qatar and Abu Dhabi is just going to fill in the gap at a very critical time for the chip industry. There is one thing, though, we start hearing that at the White House, some politicians, some members are not fully comfortable with the idea of selling chips to the Middle East due to the national security reasons. But that's a story to be followed. For now, though, the optimism has strong legs.
I want to go there. Anne-Marie talked about the sort of significance of the images we showed, which was Jensen Huang standing between the President of the United States and his UAE counterpart. But actually, there are deep concerns that the rescinding of the diffusion rule, those are those pictures now, good job to the team in New York, does not at all answer the question about China. We don't know anything about rules for China. Has the market yet to price that in?
Well, I think that most of the Chinese trade war has already been priced in, and investors have somehow came to the conclusion that, okay, China will gently get out of this picture and has a slower exposure to the Western world and vice versa. So there is now the thinking emerging that because China is willing to gain its independence and it looks like it could get there with their own means, that's going to be the future for the Chinese companies. There is this thinking that China is willing to gain its independence, and if they do so, actually, that's going to be a positive for NVIDIA because the trade tensions will not necessarily hit them as hard as they have been hit over the past couple of months. This being said, China still remains a big chunk of the NVIDIA's revenue, so before we get there, we still have some more period to go.
The shares of NVIDIA surged 16% during the 5 trading sessions that concluded on Friday. The cause? Hope for its international operations, particularly the agreements it has made to grow in Saudi Arabia and the United Arab Emirates. Its quarterly earnings announcement is scheduled for May 28th. NVIDIA announced on Tuesday that it has agreed to deliver several 100,000 AI chips to Saudi Arabia's new AI company, Humane, which is owned by the country's $925 billion public investment fund over the course of the following 5 years. The announcement coincided with a rush of agreements between Humane and U.S. chipmakers and big tech companies, including Qualcomm, Amazon, and Advanced Micro Devices. The United Arab Emirates may be able to buy NVIDIA's AI chips, according to a Bloomberg report on Tuesday. Trump formally announced a deal on Friday that would allow the country to import 500,000 of NVIDIA's prior-generation Hopper AI chips annually, according to CNBC. NVIDIA stock jumped 5.6% on Tuesday and another 4% on Wednesday, putting shares into positive territory for the year. On Friday, shares gained less than 1%. Aaron Siegel, a CFRA analyst, said on Wednesday that although there is still uncertainty around the 232 semiconductor inquiry, our perspective for NVDA has significantly improved in recent weeks due to favorable policy moves, such as the removal of the AI diffusion rule and more lenient China tariffs. A temporary trade truce between the U.S. and China was announced this week. This was encouraging for NVIDIA, as Bloomberg data shows that during the year ending January 26th, 13% of its revenue came from China, including Hong Kong. NVIDIA and other big tech companies surged on Monday as a result of the de-escalation. NVIDIA is seeking to establish a research and development facility in China, according to the Financial Times and Reuters. More good news. Trump revoked the so-called AI diffusion rule that former President Biden had imposed, which would have restricted NVIDIA chip exports to the majority of nations worldwide. NVIDIA's stock suffered at the beginning of 2025 after a new low-cost AI model from the Chinese startup DeepSeek raised doubts about big tech's enormous expenditures on AI infrastructure and concerns about a halt in spending as investors questioned the company's capacity to make a profit. Those concerns were heightened by indications of a possible slowdown in AI data center spending from Microsoft, one of NVIDIA's largest clients. Spending on NVIDIA chips does not appear to be going down anytime soon. Meta has increased its own AI-driven investment estimates for 2025 to as much as $72 billion, and Microsoft has confirmed its previously announced $80 billion in AI-driven capital expenditures for the year. NVIDIA's stock was selling for less than $100 per share just 3 weeks ago. Investors must pay 35% more than that as of early Friday trade. S&P Global Market Intelligence data shows that NVIDIA's stock has increased 16.2% this week alone. This is because recent statements this week have allayed many of the worries about sluggish growth and decreased spending for its advanced artificial intelligence, AI, chips. NVIDIA first declared that it will be collaborating with Humane, a Saudi state-owned AI startup, to construct 500-megawatt MWR's AI factories over the course of the following 5 years. To power the data centers, NVIDIA promised to provide several 100,000 of its most cutting-edge GPU chips. The U.S. Commerce Department announced that the U.S. and United Arab Emirates, UAE, will collaborate to build a 5-gigawatt GW data center campus in Abu Dhabi, and reports suggested that NVIDIA could supply 500,000 AI chips to the project. These announcements allayed fears of slowing NVIDIA data center sales and sent the stock skyrocketing, but there may be much more upside ahead. A number of major U.S. tech companies have also reaffirmed plans to continue capital spending for AI infrastructure. It's possible that investors who are still concerned about a slowdown in growth are waiting for the corporation to offer concrete advice as evidence that AI investments are proceeding at a healthy rate. However, the market is looking ahead, and the stock can rise before NVIDIA's next quarterly report, which is scheduled for May 28th. This week appears to have marked the beginning of the March higher, and I anticipate that it will continue until the May 28th reporting date. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Now, because NVIDIA, yes, crushes it on the week, up 15%, more than $400 billion in market cap added. It's, again, a $3 trillion company. Are there legs left to run with NVIDIA's up and to the right, and indeed tech more broadly?
Well, I think that NVIDIA still has earnings to be announced, and we expect that the earnings are going to be strong enough to keep the optimism going. We shouldn't forget that NVIDIA had a very difficult quarter, and we saw a very significant fall in its share price and also in its valuation. And right now, with the arrival of the good news and big clients that actually counterweight the idea and the worries that the big technology clients could be finding their ways out of NVIDIA, is obviously a very positive news. And we think that NVIDIA does have potential to extend and to, extend its rally on the Middle East deals if obviously the Middle East deals materialize and there is not a problem barrier in the future. Yeah, so definitely, yes, it has been an outright positive for NVIDIA, we think.
I mean, it's been an outright positive for many a tech stock this week. I'm looking at Alphabet up more than 9% over the last 5 trading days. That's despite the ongoing worries that this is a company that might be forced to break apart. Meta also investigation with its monopolistic, as has been deemed by the FTC, monopolistic position. What do you think are some of the risks that investors perhaps aren't tuning into right now?
Well, one of the other risks that we see, because we are in Europe, is that if the trade negotiations don't go well with the European Union, the European regulators will be going after companies like Google and Facebook, big technology companies. They have been very clear warning the United States about that. So I think that one of the trade risks is on these companies that have been spared so far because they are offering digital services, and it was mostly the companies with complex international supply chains like NVIDIA, like Google, Apple, that have been very, very hardly hit. We think that there are still risks there that have maybe not be fully priced in. Obviously, the risks are still two-sided because there is always a chance that the European Union and the US strike a deal. But if that's not the case, I think that Microsoft, Google, and Facebook are also going to come under pressure.
After the U.S. government restricted sales of its Hopper H20 chip in China, NVIDIA is assessing how to deal with the market, but it will not release another Hopper series processor, CEO Jensen Huang stated on Saturday. In a live stream broadcast by Taiwan's Formosa TV news network, Huang responded, "It's not Hopper because it's not possible to modify Hopper anymore," when asked what their next chip for China after the H20 was. Huang, who has repeatedly stated that China is essential to NVIDIA's expansion, traveled to China right after the United States imposed additional regulations on shipments of its H20 chips, the only AI chip the company is permitted to sell in China, to China. In an effort to boost sales in China, where it has lost market share to domestic competitors like Huawei, NVIDIA intends to deliver a reduced version of the H20 chip within the next 2 months, according to a Reuters report earlier this month. A week before the end of former President Joe Biden's administration, in January, the U.S. framework for artificial intelligence diffusion was released with the goal of restricting the export of AI chips to the majority of nations. Huang added that prior AI export laws were incorrect and ought to have prioritized maximizing American technology around the world. The Biden administration's AI dispersal guidelines will be repealed, according to Trump. In the fiscal year that ended on January 26th, NVIDIA made $17 billion in revenue, or 13% of its total sales, from China. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Revenue. If you kind of look at the semiconductor system segment here, the total revenue there came in at $5.26 billion. That was below the street's expectations of $5.32 billion. That's really their bread and butter when it comes to driving top line growth here. And once again, the U.S. export restrictions have been a drag on them. I think their guidance moving forward kind of reflects that. The commentary from the executive team within their earnings release also reflects that. And that's why you're seeing a move to the downside. It's unfortunate because this company actually has had a significant amount of China exposure over the years and has cut that down dramatically. I mean, significantly cut down that China exposure, but it's still going to be a major component of their top line revenue. And unfortunately, that's why they're getting hit right now.
Yeah, what's interesting to see, though, in terms of analyst reaction, sell-side analyst reaction is, although there's a bunch of lowering price targets today, but there still seem to be pretty constructive. Wells Fargo lowering their price target to 200, but they're still overweight. JP Morgan lowering to 210, but they are still overweight as well. TD Cowen lowering to 220, but they are still maintaining a buy rating. What does that signal, KG?
Well, there's only a few, fab suppliers out there when it comes to the supply chain for the semiconductor space as a whole. So it's really hard to be very bullish on, say, NVIDIA and AMD or even a Taiwan Semi and not be really, bullish on the company that helps make the components to make the chips that are deserving a premium or getting a premium for the street. So I think it's more of a rising tides lift all boats type of situation when you're looking at these ratings and these price adjustments for AMAT and the bullish nature of the price adjustments for AMAT as well. It does make sense, but it has definitely been a laggard. And if you kind of look at the chart on the 1 year daily, it continues to make lower highs and lower lows. And that's not the trend that you want to see right now.
So do you think this is more of the pattern is that in terms of investor reaction, this is a company-specific reaction and not an issue in terms of the semiconductor space?
I think right now this is a different type of semiconductor industry than what we saw a year ago and 2 years ago, where you could throw a dart and that company was probably moving to the upside. You can see a lot of investors and traders are being a little bit more selective as to which companies really deserve a premium here. And even those that do deserve a premium or may deserve a premium, like NVIDIA, the price action outside of this week has not been that great. So I think if you're looking at the companies that have a vast amount of geopolitical risk and exposure, like an AMAT, I think they're probably trading at a little bit of a discount. If you have too much of of exposure to mobility devices as well as laptops, you're kind of getting hit. But the data center and GPU space still is getting the positive flows from investors here. And I think that's probably going to be the winner until we see some of the dynamics change within the industry.
Okay, I'm glad you brought up NVIDIA. We've been watching NVIDIA. I mean, as you mentioned, it's had a banner week, but it had previously had a rough year. So, kind of take us through some of what you've been paying attention to in terms of the price action when it comes to NVIDIA.
Yeah, so we have seen NVIDIA really actually breaking out of this, let's call it a flag pattern. We've seen lower highs as well as lower lows, but now we are seeing a breakout to the upside, really testing that 135 level. This week has been nothing but, let's say, good news. You have the President of the United States going over to the Middle East, inking deals for some of our major companies like an NVIDIA or a Boeing. And that is just going to be a tailwind for this company for top line growth. And you're also seeing some of that enthusiasm and the backing of the administration, I think also is another reason why you're seeing this company push higher here. And if you continue to see that type of deal flow, once again, it's going to be a tailwind. So it's starting to gain a little bit of traction here after that breakout of the 120. But before this week, the price action actually was not looking that great. Even when we had these really aggressive 3%, 4% days to the upside on the S&P 500, NVIDIA, for the most part, was still a laggard when you're looking at relative performance to the broader index.
Okay. All right. Yeah, you make a great point. It has been a laggard. We'll see if this recent pattern can continue for NVIDIA shares slightly higher in the pre-market. Could go any way today.
The green up pointing triangle wants to establish a research and development center in Shanghai as part of its latest push to keep a presence in China, following the Trump administration's attempts to tighten export rules for its AI processors. NVIDIA's increased by 0.42%. According to those familiar with the conversation, Chief Executive Jensen Huang visited China in April and spoke with the mayor of Shanghai about the proposal. The mayor embraced it and offered to help. According to people familiar with the situation, NVIDIA's increased by 0.42% with the new facility. Green Up Point Triangle aims to strengthen its teams that research and communicate the needs of its Chinese clients to the company's headquarters, assisting NVIDIA in designing products that are both competitive in China and compliant with U.S. regulations. Washington has mandated licenses for the shipment of NVIDIA's most cutting-edge AI chips to China since 2022. As a result, China sales, which previously made up 26% of revenue prior to the export restrictions, now only make up 13% of revenue in the company's most recent fiscal year. According to the persons, the company is looking to lease office space in Shanghai for the new location in order to accommodate both current and prospective new personnel. According to the persons, officials in the city where Tesla's China plant is situated have promised the business tax incentives and a reduction in red tape for its new project. Referring to graphics processing units, a firm representative said in a statement, "We are not sending any GPU designs to China to be modified to comply with export controls." In order to continue selling to China when Washington tightened its regulations, the business has produced degraded chips on multiple occasions. Some U.S. officials were incensed by the practice because they felt the firm wasn't doing more to stop China's AI advancements. In order to avoid losing market share to domestic firms like Huawei Technologies, which are occupying the void left by NVIDIA and its American competitors, NVIDIA has stated that it complies with U.S. export regulations and has argued for selling to Chinese consumers. About half of NVIDIA's 4,000 workers in China are based in Shanghai. A few engineers in the nation have been assisting the business with its international development initiatives and research in cutting-edge fields, like autonomous driving. According to persons acquainted with the situation, NVIDIA recently informed a few significant Chinese clients that it is attempting to reduce the performance of the H20, the most recent chip Washington placed under export restrictions, in order to comply with the new regulations. Additionally, it informed clients that it is using its more sophisticated Blackwell architecture to create a compliant chip. The United States, which is reviewing the specifics of its export regulations, must approve any new chips for China. The firm official stated, "We are not redesigning any chips at any location in China." Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
I'm curious to know what your biggest takeaways are from the price action we've seen this week.
Yeah, for this week, we have seen, obviously still a move to the upside when it comes to gains for the S&P 500, but it has been slowing down when it comes to the momentum, and you can kind of see that with some of the pricing oscillators that are out there. Yesterday, what was actually very interesting when you're looking at the performance of the S&P 500, a lot of the green that we saw on the screen yesterday was actually from defensive sectors, as well as sectors that were interest rate sensitive in nature. And so if we can continue to see a little bit of this rotation, the broadening out of this rally, build us a little bit more of a foundation. I think it makes it a little bit harder for the bears to really try to knock this market down for now. But when you kind of get to the economic data that reflects maybe some economic slowing or some inflationary pressure, I think that's going to be the biggest question mark for how we actually resolve this. We had PPI data that came in softer than expected for the current quarter, but we had a really aggressive re-rating to the upside if you look at the revisions. And then the intermediate goods actually saw some pressure when it came to inflation. And those intermediate goods are really going to be the first area that you see inflation kind of rising because of these supply chain issues that we could be having over the next couple of weeks and months. So I don't think we're out of the woods yet when it comes to the economic data, but it does appear that the market's really kind of discounting any type of economic slowing data that might be hitting the wire over the next couple of weeks here, at least for now.
Okay, so in other words, because of the nature of where we're seeing the flows, with being defensive in nature, it seems like there's still some worries under the hood about some potential economic risk.
That could be the case, or it could be the fact that maybe some of the Mag 7 and communication services and technology stocks maybe have been a little bit overextended, and you're probably seeing maybe some dollars being put to work in other sectors. I mean, there's a multitude of reasons why we could actually see this type of rotation, but either way, as long as we are seeing gains on the S&P 500, I think the market considers that to be a win. We do have options expiration today as well. So there might be a little bit of gyration in the markets, especially when you're looking at the last hour and a half to go in the session. You could see a little bit of volatility, and that could be actually healthy for this market here. Also keep your eye out on some of these stocks that might be rebalancing the S&P 500. They could also see some tailwinds here when it comes to money flows because of these money managers that have to rebalance in preparation for Monday's session, if you will. So like Coinbase obviously has been getting hit, but we might actually see some positive inflows for Coinbase today just because of that rebalancing.
So given that where options expiration is today, could that potentially cause a speed bump for the bulls?
Yeah, anything is possible on OPEX day. It's not a quarterly, so we don't have as much notational value actually running off, and we have something called volatility crush or Vanna exposure, which that actually could be a positive for markets, especially for today, since we do not have those quarterly expirations. But if you do get an aggressive buyer of some puts or somebody that does put on a very aggressive bearish trade today that expires today, that could get market makers a little bit off guard, and that could actually create a little bit of turbulence. When I look at the VIX, the 17.4 VIX is actually relatively low given the environment that we're in on the macroeconomic stage here. So I would say if you do think that hedging is appropriate right now, it's pretty cheap to be able to hedge in the event that we do see a re-rating to the upside. VVIX is already showing that. So volatility is already inching higher, and that's usually your first indicator that implied volatility for the S&P 500 as a whole might be hitting towards the lower end of its range.
Okay, so given that the markets have been pushing higher this week, I'm curious to know, especially in particular, your targets to the upside and downside on the S&P 500. For instance, if we're poised for a breakout here, or if this was essentially short-term momentum heading into expiration.
Yeah, for the upside here today, I'm looking at 59.50. I've been looking at the 59.40, 59.50-ish area over the last couple of trading sessions. I haven't seen anything that's too aggressive to the upside. Maybe, it's options expiration. Maybe we hit that 5,000 or 6,000 level. That would be huge if we're able to actually do that. But 59.50 to the upside. To the downside, I'm still looking at 5,800 to be able to hold here.
Okay, all right.